Gold. Harry, I know you have lots of views on gold. You have said in prior media appearances you don't hate gold. You're not a gold bug either. You saw gold falling this year. Well, it's risen, now it's falling. So what's your sentiment now?
Okay, gold follows two things. It is the closest correlation with inflation. Long term, it only correlates with inflation. Okay, and inflation peaked in 1980, and it's going to go down and keep going down in developed countries. Okay, so that's going against it. It also follows the 30-year commodity cycle, peaked in 1920, 1949 to 51, a double peak, and then 1980, and now here again, a double peak in mid 2008 and late mid 2011. Gold peaked on the second one. So gold peaked there, came down. Now all this stimulus, gold rallies with this stimulus up to a point because they assume it's going to cause growth and inflation again, because gold primarily correlates with inflation more than anything else. I see gold. I predicted it would crash when it broke 1525. It crashed down to 1050. When it hit there, I said, gold now is oversold, due for a bounce with all this money printing. And now I'm predicting gold will probably watch what's just happened. In 2008, gold continued to go up when stocks went down, sensing a crisis, money printing, stimulus, which it loves, okay? And in the February-March crash, gold went up in the first 2 weeks of that 5-week crash, went down in the middle of it and came back a bit. Gold ended up down, but not that much. I'm expecting gold to go up into early to mid. When this crisis starts to build next year, it's going to see more stimulus. It's going to go up at first. I have a target of 2,200. That goes through the tops in gold all the way 1980 in 2011. 2,200 is the strong resistance in the coming months. I think gold's going to go up to 200 at first and then crash back down to its 2015 lows around 1,000. And from 2022 on, I'd be buying gold hand and fist. It's going to hold up better than most commodities. And gold is loved by the people who are going to be driving the world economy, Asians, and especially Indians and Chinese, and especially Indians. Indians spend more per dollar of income on gold than anybody in the world.
It sounds like you are super long-term bullish on gold. Yeah. I mean, the immediate term, we're going to see
another 30-year commodity cycle, which bottoms around 2023, just happens to bottom when the demographics do. But more important, the rise of Asia, the whole growth coming out, no longer going to be Europe and North America. We do okay. Europe continues to lag. East Asia is going to lag. Southeast Asia and India are going to drive the next boom. And those people are going to be big consumers of gold in addition to all the other commodities.
So $1,000 is around the bottom for you?
Yes, around 2022. And then, who knows? Gold bugs are saying it'll go to 5,000. I say, yeah, I say, I agree with you when you're dead. So it'll be the next commodity cycle. Again, I'm a cycle guy. Yeah. I can tell you cycles on all types of next commodity cycle peaks between 2038 and 40. I will be close to dead, if not dead by then. So I'm just hoping I see gold at 5,000.
You said it's going to rise to 2,200 first, but what's going to take us there? Vaccine news has been clobbering gold prices for the last couple of weeks.
Yes.
And the vaccine's not even out yet, right? It's just news. What happens when it's actually out?
They don't want to see a recovering economy that needs less printing. Gold's been going up on money printing. That's been the biggest driver of it. So if the economy starts to weaken again, gold's going to say, see, just like 2008, gold had a big run in 2008 forward when they started printing money hand over fist. So they're going to react to the money printing in the next round, probably in the first quarter, have their last thing. And again, what caused gold in 2008? It did the same thing. Money printing early on, crisis good. When the deflation set in, remember what I said earlier, gold correlates almost 100% with inflation. It does not want to see deflation, okay? So when deflation sets in, like when Lehman Brothers hit in mid-2008, gold suddenly went down 33%, silver 50%. It was not the safe haven in the GFC. It will not be the safe haven in this downturn either, because this downturn is going to see deflation. That's what's going to drive gold to $1,000, give or take. but it goes up because it's not going to see that deflation early on. It's just going to see, more money printing.
Yeah, yeah. I wonder though. I mean, if you think, well, you're right. Gold is nearly perfectly correlated with inflation.
Unbelievably
Yeah,
correlated.
95%. I think 97% correlation with the TIPS index. Now, if you think inflation will eventually pick up, why wouldn't the stock market pick up along with inflation?
No. I mean, we may get just a teeny from all this money printing. No, the downturn always takes inflation down. I'm talking a really big downturn that will take us into negative inflation. We only touched that in 2008. Why? What did they do? People don't understand. All this money printing is not to create inflation. It's to fight deflation. And they want to get 2% inflation just to fight. It's only been fighting deflation. When deflation comes back in, there's going to be a point where they can't print enough money, Dave. And this has happened in the past. They can't print enough money because what I tell people, the central bankers unknowingly, by goosing up financial assets, remember the number, 500 trillion, 6 times global GDP, overinflated financial assets, they've created a monster that they cannot control. When the smart money and investors decide this ain't working no more, there ain't no amount of money they can print to stop that. That will take, remember the number I said, minimum $200 trillion in real wealth and money out of the economy globally, and you will never see inflation for a long time, and it'll come back slowly in the next boom. You're not going to have to worry about inflation a year or two from now. It's going to disappear and go negative. That's my point.
One more point. The Dow gold ratio is something I've heard from some prominent economists. Now, what the argument here is that in the past, we have seen periods when the Dow to gold ratio was 1. Now, right now, 30,000 points is in the Dow. Let's just round up gold to $2,000. Make it a nice round number. Yeah. So some quick maths in my head. That's a ratio of 30,000 to 2015. So 15 to 1 is a big gain. Do you subscribe to that theory?
Well, I would in ordinary times if we were not going from the greatest bubble in history into a deflationary reset. Okay. And it's hard to judge gold on this because in the 30s, they controlled the price of gold. They confiscated and controlled the price of it. So you can't say, oh, what did gold do in the 19th? I'm telling you, if gold had been free trading in the early 30s, it would have crashed. And so this is a temporary thing. Long-term gold will return to inflation. Long-term gold will definitely boom with the next commodity cycle. I think the next commodity cycle, David, overall, with gold as being a leader in the precious metals, may be the strongest in history because emerging countries, which are going to be driving this next boom, Asia, Middle East, and Africa, consume a lot more commodities as a percentage of their income than they do, capital goods and things and stuff. So I think gold is going to do well long term. This is a reset for gold. I have to remind gold bugs, because gold bugs like Peter Schiff talk about, oh, all these bubbles, it's all artificial. I'm like, Peter, gold went from 250 to 1934 in 10 years and went from 450 to 1934 in 6 years. That's as big as any stock bubble we've had. Gold bubbled with this as well. Gold is a financial asset in most people's mind, and it correlates with inflation. But again, the mistake here is that everybody, particularly gold bugs, keep thinking escalating money printing is going to create more and more inflation. And what do we have? I just debated Peter Schiff. I said, look at this, all this 10 years of 24 trillion of money printing, and inflation still sitting between 1.2 and 1.5%, and it's near zero in Japan and 1% in Europe. There is no inflation.
Yeah.
Because they're just offsetting deflation. You cannot create significant inflation, and therefore that's a reset for gold. Gold investors keep assuming we're going to get inflation one of the days from all this money printing, and gold's going to go to 5,000. I am going to predict today, and you can send me out of town on tar and feather, gold will not see 5,000 until at least 2038, if it sees it then, and gold is going to have to get that there is not going to come. This is not going to be an inflationary crisis. It's going to be a deflationary crisis. When it sees that, like June 2008, gold said, oops, we've been going up in this crisis, down 33% in a couple of months, silver down 50%. That's when gold and silver got reality. Oops, deflationary crisis, but they got saved by the Fed jumping in, central banks, and printing trillions of dollars.